let's move on and put the spotlight on another stock that is in focus, that is Gallantt Ispat. Now, they have reported a very strong set of numbers for the quarter gone by. And what's the outlook going forward? For that, we are now joined by Mayank Agarwal, the company's CEO. Hi, Mayank. Very good afternoon. Thank you so much for joining us today. So, first up, let's talk about your financials. Pretty strong quarter, especially the profit. There's been a sharp spike over there. Take us through what were, the factors that led to this kind of an increase. Were any one-offs at play? Do you think this kind of growth, the one that you have seen this time around, is this sustainable?
Hi, good afternoon, and also a very good afternoon to all the viewers. And as you rightly mentioned, yes, the results are very, very exciting and encouraging, especially looking at the steelmaking environment currently that we envisage in. Having said that, I'll quickly move to the operational parameters and the reasons behind it. If we talk about sales volume, there is a 8.6% revenue increase on a quarter-on-quarter basis and about 2.6% on a half-yearly basis, despite reduction in price realization of the steel. The PAT on Q-on-Q basis has increased to 87 crores, which is 78% higher if we talk about Q2 last year. And if we talk about the half-yearly results, it is about 53% higher from the last year. So the profitability is very encouraging, and there are certain reasons behind it which I would like your viewers to know. So the main reasons are that our intermediate products, which is sponge iron and pellet making facility, they have shown a very sharp improvement, where sponge iron production has increased by about 15% and pellet production has increased by 26% on half-yearly basis, which is substantially good. So, which has resulted, and also the raw material cost overall due to these reasons has reduced by 5%. So this has resulted in an EBITDA margin improvement by 45% in the Q-on-Q basis, which is in the last Q2 last year, the margins were about 5,000 rupees on per ton of steel making, which has now gone up to about 7,000 in the last quarter. And if we talk about half-yearly basis, the last year, it was around 8,200 rupees per ton, which has gone to about 9,200 rupees per ton, which is an increase of about 26%.
Right.
So the major factor driving the wonderful results that we see here
Correct.
are broadly the intermediate products where the production has enhanced drastically, resulting into reduction in raw material cost and improvement of EBITDA margins very considerably.
Right. So you did mention the EBITDA margins have improved very significantly, but are these levels sustainable, Mayank?
Yes, they will definitely be sustainable, and a lot of Capex we has been done in the last year, even in Q1 this year, these numbers are the result of those investments, and they are definitely going to be sustainable. And besides these, I would also like to highlight a lot of Capex plans of the company, which besides adding the facilities are also being done to improve this EBITDA or per ton margins. So currently we have a plan of about 2,250 crores of Capex, which has already started. So it's not just a boardroom number, but it's something which is already under execution. Out of these 2,250 crores of Capex, 1,000 crores of Capex is being done in steel making facilities at both the units in Gorakhpur and Gujarat. About 250 crores is also being done in solar power projects, where the power would be utilized by these units of steel making. So it would be captive. And about 1,000 crores is planned for mining with beneficiation plants at different locations. So in the current year, the company has secured about 2 mines from the government in UP, Sonbhadra district.
Yes.
And last year, we have secured a mine for Gujarat unit in Rajasthan. Yes. So both these mining facilities are and will be developed. It's a long-term issue. These mines will be commissioned in 3 years from today. So, but the survey works and the drilling
Right.
and the conceptualization work is in progress, and the results are very, very encouraging on all these three mines,
Correct.
two in UP and one in Gujarat.
Right.
So a lot of activity, in fact, is happening on the Capex front,
Right.
which which would definitely make a very good impact on the
Correct.
sustainable. The profitability on EBITDA would definitely, in fact, increase. I would like to put it across as due to these capex, because these capex in steel
Right.
making, as I said, about 1,000 crores is not only in steel making for addition of steel making
Correct.
facilities. We are doing a lot of capex where the inefficient modules are being replaced along with the
Yes.
additional capacity in our power plants and DRI making facilities in Gujarat.
Right. Right.
And a lot of waste heat power is being added to the
Right.
captive power plant through sponge iron
Right,
route
Mayank.
without, in fact, enhancing the.
Okay. Right, Mayank, thank you so much for that update and best wishes to you on that Capex deployment and the three new mines that you were just talking about. Hope to chat with you again. It was lovely speaking with you today. Thank you so much for joining.